Good morning, everyone, and welcome to the Wednesday's Morning Bell with me, Richard K. Right, guys, 3rd of August, halfway during the week. Not much happening on the economic calendar today. I did mention we're probably going to have to wait and see what happens with Friday's jobs numbers. Like Powell mentioned previously, when he raised interest rates again, that he'll be closely watching important economic data to decide whether the next potential rate hike would even happen or potentially be lesser than before, maybe not rising it as much as the 0.75 basis points he's done twice in a row now. So, yeah, we might be in for a little bit more sideways, choppy market action on the major indices until Friday. So, yeah, all eyes, in my opinion, will be on Friday's jobs numbers. All right. Okay, guys, today, as always, we're going to be looking at the ES, NQ, crude oil, gold, and then I've got some data finally for the dollar index. For those guys who like trading the currencies, especially the major currencies, trade versus the dollar. Good index to keep an eye on if you like trading the currencies, as well as trying to glean some potential other information from a market geometry perspective, support and resistance perspective, as to what gold might be doing, right? So, without further ado, let's quickly have a look at our markets here. Right, I also want to talk about, besides these levels that I'm seeing in most of these indices, both the ES and the NQ, I've said that I've got, sort of a bias toward that this was a very strong low, or lows that we see on the ES and NQ in June already, right? But I also did mention that there's quite a lot of work that both these indices still need to do to the upside, i.e. that there's a lot of upside resistance zones that needs to be overcome on the bigger picture. So, until those zones are broken properly to the upside, there's still the potential that we might just be seeing some sort of a large correction. Right? I know that's not what everyone wants to hear, but it is what it is. Only time will tell. And luckily, by just knowing some important levels and zones, you can glean some sort of information of that, whether you still dealing with a correction or has the trend changed. So, luckily, price pretty close to, on both the ES and NQ, to very strong resistance areas. They're not they've almost been met. On the NQ, one of the levels been hit. We'll look at the NQ next. But on the ES, we still have this center median line slightly higher up. That's not been reached yet. Currently resides within this little zone here that I still have at 4,165 to the upper limit of that zone, 4,204 3/4. And our upper limit is basically encompasses the center median line where we could still see resistance, right? And as well as this previous market structure high that we had here. More particularly a lower high at 4,204.75. On the NQ, that's been reached before, that previous market structure. On the ES, not yet. So it's important to note that this pitchfork that I drew down to the downside, see how beautiful price respected this lower red warning line here. Let's just call them angular support and resistance line. Pulled back straight to one of these angular lines parallel to each other. Retested it. Has not reached this line yet. Okay? So, is it going to? Probably a high probability, in my opinion, that price will still be drawn to there. But this is really the areas that I want to see the ES to break to the upside and breaking it properly. I mean, we also got all these previous lows here that formed, which could now also act as resistance. It did over here. There was prior support, broke, up, down, resistance at prior support. Will it act as resistance again? That is the question. All right. On the volume profile side of things, I think I've shown this on Monday, we measure the volume profile of the entire move to the downside, excluding this jump or bounce that we currently see. Whether that bounce corrective, we don't know. Again, or it's the start of a new trend, we don't know. All right, just a lot of evidence that the price had bounced from a very strong support level that we talked about before. But again, price needs to do quite a bit more. A lot of overhead resistance. Price currently trading right at this high volume node over here. Bit of a void to the upside there. So price will really need to overcome this upward sloping pitchfork trapping this move to the upside. There's our upper red warning line, and we have this downward sloping larger pitchfork right there. Alright, so that's above this volume node. Quite often you'll see price pull back to the upper ledge, let's say in a bullish move, pull back towards and then move up if the trend would continue. So yeah, a lot of noise happening here, a lot of resistance up here. So a nice proper clear above this area, and that would then raise the probability even more that this was a strong low. So not out of the woods just yet, although I've been mentioning previously we potentially can see a move to the upside. At least that did happen, so we got that right. Let's quickly remove the volume profile there. Now there's something else I'm seeing right within these areas. I just want to get rid of most of these drawings. And let me quickly, what did I use before? Yeah, let's put my snuff mode on the channel. I want to go from this low to this low in June, back to the high in January. Gave us this lower high, right? Potentially not a way many people will draw things, but I try to find the angles that is repetitively working as support and resistance. Now I want to use the same channel. I copy and paste it and add it towards on top of these highs on the end of March. And what you'll see is that even these smaller little angular lines in between also acted as beautiful support resistance areas. So this is still, for me, the operating angle or slope of this downward move. The more these lines get broken, the better. Now you'll see that prices actually reached, and this was on Monday, this upper angular line. It retested it yesterday and it's failed to break above it. Now we bring back all those other drawings. This will be a good indication that price will potentially reach 4,165 and maybe even a little bit higher. But again, still a lot of mess on the upside here. That's what I'm trying to say. So, you know, really a lot of stuff still needs to happen. ES needs to clear these levels, and it needs to do so with proper momentum behind it. Alright, so I apologize for all the lines on here, but it is what it is. I'll get rid of them for the next session again. That's on the daily. Well, let's quickly look at the 4-hour chart. Same levels there. I still think we can be drawn towards there, but now temporarily this angular line of the channel is acting as resistance. Let's get rid of those quickly. I want to look at the RSI because in daily we're not seeing momentum divergence on the RSI yet, right? It is in what people would consider, or traders or analysts would consider, an oversold condition above the 70 level. Some people will use 80, some people would on the lower side use the 30 or the 20. So, you know, I'm more interested on momentum divergence. And from what I'm seeing on the 4-hour, because it's not present on the daily yet, is no real major momentum divergence. I mean, this little peak and that little peak, this all looks corrective, is what I'm trying to say. So, you know, if we do make another high and we see momentum divergence, let's draw that in. Let's say this is all just some sort of a correction. Oh, come on, I have to do that now. There we go. Let's just do that again. Let's say this was some sort of correction, either here or a little bit lower, doesn't matter. But price then makes another high. And while it makes another high and we see strong evidence of momentum divergence between between a peak and a current peak, then be careful. You know, momentum divergence, as we probably all know, depending on what indicator you might be using for this. In our case, we're using the RSI, can stay in an overbought or oversold condition and show momentum divergence for the longest periods of time, before you actually get reversals. This is why, for my line of work, market geometry, if you see divergence within important market geometry areas, like we've identified in that zone up here, then be careful. All right. So these levels aren't far off. We get Friday's job numbers. I don't know if anything might be a non-event with these job numbers. Who knows? Might be some other political event that swing markets lower, or see the ES continue to the upside. But what is important here is what happens if we do get a strong reversal from within this area, if price actually does reaches it. Well, then price should not break below, and I'm going to remove that quickly again. Let's just quickly disengage the snap mode here. If this is corrective, then we might be dealing with extended C wave. Alright? It's not uncommon. Although I've said that if this leg to the upside starts breaking above 138.2 of this leg, on the fib extension side of things, did I draw that properly? Yeah, the price hasn't reached it yet. Then, and it reaches 161.8, the golden ratio, then even more confidence that this is getting overextended. I won't say overextended, but behaving more like an impulsive wave, i.e. potentially a 1, a 2, 3, 4, then a fifth wave. Then a correction, then a move to the upside. Right? Well, we have not seen that yet. This could still be corrective. But let's say price would decline from current levels or within that zone I showed you before. Then we don't want to see a break below these previous highs over here. A strong break below, I should say. And that's around 3,949 and a half. Okay? Because if this is some third wave that's still underway, one would expect that this third wave should be longer than your first wave, right? Basic elite wave principles. So now it's not even reached 138.2, which is, I still think it will, and also in those zones I've shown you. It'd be great if we can go even higher. But then, only then, I think we'll only be dealing with a third wave. A 1, a 2, incomplete third. Either here or higher. If we then get a move lower, this is your invalidation line, 3,949.50. That the fourth waves are not allowed to move into the area of where you counted your first wave. So, still lots of work needs to be done to start seeing, and I would say in a late development of potential trending market to the upside. But still not 100% there. Alright, okay, that concludes the ES. I hope you guys understand what I'm talking about. So, yes, still a lot of upside resistance. Let's move on to the NQ. The NQ, on the other hand, broke that previous market structure on this preceding move to the downside. As we all know, the NQ actually started moving lower, or at an earlier time frame, actually in November last year. But similar thing here, drawing market geometry, using a shift pitchfork downside, boom, price reached low red warning line. We also had this angular upward sloping angular lines at price where we had confluence on the daily, we price reversed from to the upside. The price structure on the NQ, however, a little bit different than on the ES. Obviously comprises of different stocks and so forth, but they all tend to follow each other. But in this case, also the same thing. Do we have strong evidence that this is a strong low? Yes, we do. But same thing as the ES, price would need to break above these areas. Similar to the ES, NQ has also not reached this angular line, which currently resides at 13,225. Yes, it's broken that previous market structure, 12,980. But here too, I also want to see a proper break with a lot of momentum behind it above that area to really start raising the confidence even more that this was a potential strong low, potentially end of a very large correction. Let's quickly bring out the volume profile again. Let's let that load quickly. We're in a low volume node here, not the biggest. Much larger one lying around up here at the 14,006 level. Also the point of control. So it'd be cool if price can move into these areas. Really would strengthen that idea that this is a potential end of the correction. Right? No sign of momentum divergence on the daily on the NQ just yet. Let's quickly go to the 4-hour. Give that a few seconds to load. And here we are seeing evidence of momentum divergence. So this might just be corrective. So, you know, same thing as I've shown you before. We want to see divergence between, let's say that was obviously a higher high. We had a correction, break of that high. You want to see momentum divergence between peaks. I mean, there are different ways to obviously read it, but I'm not seeing any real strong evidence except for this little move to the upside. We had slight divergence on the 4-hour. Very, very, very slight. All right. So here we've also had price test this centimeter line, and that's the same one of that upward sloping pitchfork that I've shown you before on the daily. Struggling to break above it. So it is at the moment, the NQ is at the moment, I should say, within a very strong resistance zone. Again, between 12,980 to 13,225. You need a strong break above here. The other worry I'm having here, and this is something I should have noticed before, but you know, it is what it is this 5-wave behavior of this move to the upside. And especially the shape that I'm seeing here. Could be some sort of an ending diagonal looking shape, which is not good looking. If this lower trend line here gets broken, then something else is going on. And then this move to the upside here from, also from June obviously, might have just been an A, a B, and a C, where this C wave here could be an ending diagonal shape, as you see with these trend lines, the upper and lower trend line, you know, getting shallower and narrower towards each other, not shallower, narrower, okay, and behaving, oops, I should do it from here. Where's that labeling tool? I'm not going to use it because it's giving me nightmares sometimes. C wave, potentially a 1, a 2, a 3, a 4, 5, contracting. So we need to break above these areas, disregard this shape. We need to not see momentum divergence on the RSI. Price needs to continue to go higher. Break below here, and especially below this trend line. I'm going to start thinking this is some sort of topping pattern instead, and this is just an ABC with a C wave again. Could be an ending diagonal, and boom, that could be a nightmare for the NQ and the ES and the Dow Jones and everything for that matter. So basically the gist of things, guys, we've been looking at these levels on both the ES and the NQ. Price on the NQ reached some of them before, where on the ES it hasn't. But the gist of things are we're in very strong resistance zones. The price needs to break above to prove that the entire move from the beginning of this year, well, from November on the last year on the NQ, and price's top there was just corrections. Alright, so make or break points actually, both the ES and the NQ. Alright, let's look at crude oil. Wishy-washy, nonsensical, on a bigger picture at least. If you look closely, we pretty much just, well, not us, I always say that. Price has just pretty much been stuck in this sort of blow of high that we've seen here that ended on the 8th of August. No, sorry, March, not August. So yeah, like I said before, previous sessions, I'm hoping this was just an A, a B, and that we still, well, not hoping, that we could be seeing an A, a B, a C corrective move. That's not done yet. I also said last week we need to see a break below 92.95. That level's been holding. We need to see a break and a close below the potential on the daily. And then I think that we have a high probability of seeing crude oil testing the 14th of July, it's last month's lows at 87.64. This is on the September contract, right? But difficult, man. Yeah, good luck trading this if you're trying to swing trade it. Potentially, probably a better environment to try day trade this at the moment. Sort of a ranging environment, albeit quite large ranges, like crude oil can definitely give us. And as I said before, I hope this is not a correction, but could be. Correction that's potentially not ended yet. If this is a C wave, one would expect C wave to clear below the A wave. High probability of corrections doing that if they're single zigzags. Yes, very messy price action in between. I'm more worried about the overall shape if it is a correction. And how it should behave and where it should be moving to, right? But price has, at this low last month, failed to break below these lows on the 15th of March and this low on the 11th of April, same year. We had that scenario here where price broke or failed to break above these blow of highs. And if you can remember probably from, I think I mentioned it last week, Friday already. If I haven't, then I do apologize. I think I mentioned it on Monday, that's for sure. That this behavior of prices almost reaching previous highs, almost reaching previous lows, could be a sign that we're dealing with a very large triangle. And if this is a very large triangle, I think this means at a later stage that crude oil could still move higher. At a later stage. It's just going to be a delayed sort of move before we see another high. This move to the downside really needs to start moving much stronger down to the downside and behave like a third impulsive wave if this was an important high. And we need to then see this sort of behavior. We have a very large third, fourth, fifth to start thinking that this high that we've seen in March was actually a high. You know, at the moment, one would expect a third wave of a start of a trend, kicking off a trend, or a third wave should behave impulsively, and it's not. Which makes me think, be careful, potentially dealing with a correction still. What correction? I don't know yet. But like I mentioned, the alternative idea that I have is that we could potentially make an A, B, C, a C soon. Something like this, a move A, B, C. Could be an extension down to maybe one of these angular lines, and then we see a move to the upside. And then at a much later stage, perhaps end of this year or even next year, then potentially only see a much larger move to the downside. So this could happen quicker rather than later. The delayed effect of this could be that we're potentially seeing a triangle. But if it is a triangle, you won't really know it isn't a triangle until you assume you might be dealing with a D wave. And when price reaches areas where D waves tend to end, and I'll draw that for you guys now, and price reacts from those levels, then you anticipate an E wave. Price reacts from those levels, then you got a high probability triangle on the way. Otherwise, you are just pretty much guessing. But in trading, sometimes you have to, or at least have some sort of plan or idea of the future, what could be happening. So if this is a triangle, then we won't really know until we get a much higher move, in my opinion, probably up to here somewhere for potential D, then an E to complete the pattern. Then we get another move to the upside. What I like about the triangle pattern, whether it's going to happen or not, but if it does, is that triangles tend to be your penultimate corrections prior to important highs and lows, especially if they take long periods of time to materialize. You see there's quite a lot in commodities. Well, most markets actually. So if this is going to happen, we're just going to have to wait in sideways, messy, wishy-washy sort of price action for a considerably longer period of time. Then get a pip higher and then potentially more relief much later. Alright. So I hope you guys understand what I'm saying. If you're dealing with, and let's say this is a D wave, then potentially this was an A, an ABC for a B, and we might get another move to the upside, where you'll then expect your D wave to find resistance at one of your fib retracement levels measured between your B and C wave to try to figure out where D wave might end. Considering how volatile things have been and still are in the economic climate of things, we might see a retracement towards the 61.8 to 78.6 fib retracement areas. Up there. So we get a move up like that. Let's just get rid of that. Let's into that area. Something like that, right? And sometimes you can even use your pitchforks to figure out where your internal waves of a triangle might end. This might be an ABC small expanded flat B wave. Yeah. Price might glide into an area over here, then a decline. Again, too early to say, guys. Pure speculation. Pure speculation at the moment. But that's what a triangle should look like and behave like, right? Because on the other hand, we might see another move higher that fails to break sort of at these levels and then come down, and then the shape of the triangle might change to an ascending triangle instead. Alright? So yeah, I'm obviously hoping for lower prices. I think most of the world are. Because, you know, it's affecting everything. The price at the pump, gas, very expensive. In turn, affects prices of food, transport, all that sort of stuff. Huge knock-on effect. Stuff we don't really obviously want to experience, but it is what it is. So we'll just keep track on crude oil while it's still bouncing between 101.87 and 92.95. There's nothing for me to do here. Those are the two lines in the sand. Price needs to break above to potentially, you know, keep this triangle idea alive. Or if it does break below this, I think we'll see a test of the 87.64 level set last month on the 14th. Gold's up next. Now here's the thing with gold. I said we potentially had an ABC that completed at a lower median line of a shift pitchfork. It didn't quite reach it, but you know, it's done enough in my opinion. Although one thing I don't like is this C wave of this triangle. It's a little bit short for my liking. What I mean by that is, let's just get rid of all these lines again, is that if we use a fib extension, let's say this was an A wave, and that was a B wave. The price really almost nearly reached that low median line. Within a few ticks it fell short of. It hasn't traveled parity the same as this first drop to the downside. Which begs the question if we're still going to see another decline. There's definitely a possibility. Alright. Now this mess that I want to show you over here, and what I mean in the bigger picture by this potentially being an ABC, is that this was an A, a B, a potential C wave over, or another C wave is still going to extend lower. We'll talk about how that C wave could still materialize and what needs to happen for this to be a strong low in my opinion. Price very close to a level that needs to hold, needs to be broken to confirm that this was potentially the low. Now, that's very close by. It's actually this low. We'll talk about that now. In any case, if this was an A, a B, and this is a C, this begs the question, what was this bloody mess over here? Definitely a triangular shape in my opinion that we can see over there. And I think this was an A, that was a B, and that was a C. Come on, why is it doing that? I'm probably clicking too much and getting too excited. There we go. Funny ABC, right? But there's a reason for that. I think this B wave was a triangle. the shape that I've marked out with those orange lines, A, B, C, D, E, for that B wave, and then up. So A, triangular, B wave, C wave, failed to break those highs in August when it was 2020, and we've seen a decline. Problem is, like I said before, this dropped to the downside. Although it broke below these lows, at a minimum, that's what the C wave should do. I'm just not happy with. I know the markets don't care if I'm happy about things at all, but yeah. There is an opportunity, or potential, that the C wave's not completed yet. That being said, it is possible to count 5 waves to the downside here, right? For a C wave, 1, 2, 3, 4, and a 5. For that larger C wave, that's a possibility. The other possibility, if the C wave should move lower, or could still move lower, and we'll look at these levels I've talked about at the beginning of this week as well. We already had a reaction from them. Is that this C wave is still subdividing to the downside, meaning that this was a 1, that was a 2. Then you need 5 waves for a third wave. 1, 2, 3, 4, 5 for a third. Then we're going to get a fourth, and then later we're going to get a fifth to complete the C. Also later this year, before we get a move to the upside. That is a possibility, but that possibility will only become effective, in my mind, if price stays below this previous low here. Where's my... Let's just get the snap mode on again. Because in that scenario, we said it's a 1, a 2, an incomplete third still underway. Right? That being the first of the third, second of the third, third of the third, potential fourth of the third. Price breaks into the area at 1809. 1809. Then that discounts this idea that a C wave is still subdividing to the downside. And that gold potentially bottomed already. And you can see how close price came to that level already, right? Now, if we have to keep the same larger pitchfork that we drew using those prominent anchor points, which is typically what you want to do with market geometry, use the most prominent anchor points prior to a high or low, or prior to a move that you're actually tracking, in this case downwards. Where will it find support? And we've been looking at this area before, and price did find support there, but like I said, this could still be subdividing lower, but price now pulled back to the upper median line, and let's put that on the 4 hours so we can see what we're doing here. Alright, yeah. Shift pitchfork again to the upside. Look how price has been riding this upper median line. It also reached this, I don't know if you can see that green line over here. That's where we had that target for a little while now. The price easily reached it, but it's failed to break above that level. And remember, we have at 1809. That's that line in the sand for that subdivision to the downside, to keep that idea alive. Hopefully price breaks above that area, and if it does, then we potentially already have a 1, a 2, a 3, a 4, and then a 5 wave sequence corrective, and then a much larger move to the upside at a later stage. On the 4 hour, we have that move to the upside. And during this move to the upside, we have momentum divergence on RSI. Not to say that is the high. It's a little bit concerning that we, like I said, price would need to break that 1809 level. If it does, we go higher. If it doesn't, still potential drop lower. This might just have been a third wave. 1, 2, 3, and then some fourth wave, and then a fifth wave again. But if price then breaks above here, it confirms a 5 wave sequence to the upside. Right, hopefully that makes sense, guys. Yeah, if this is still moving to the upside, then how would that look like? then we're looking at a wave subdivision of potentially a 1, a 2, a 3, potentially 4 still underway. And if this is a 4, it should not break into the area of this previous high where the 1 was. Then give us a 4th and a 5th. Break that level, raise confidence. This is a strong low. Right. Okay, so yeah, also line in the sand. We don't want to see a break below this level that soon yet. If it does, warning signs, potentially going to see another low on gold. Might move actually much lower and follow that other bias that I showed you. Price still subdividing lower and the C wave. That's not over yet. Right, guys, then I quickly want to look at the dollar index. Don't know, this is probably small petty things for most of you guys, but I'm quite excited because I got data for it. Difficult to say on what's happening on the dollar index. Is price still going to get, move higher? Is it correcting at the moment? So I'm going to be looking at the dollar index and tracking a little bit more for those of you that are interested in the dollar index at trade currencies. But from a market geometry perspective, there is something that I've been seeing here. And this is now set to a weekly, so quite a lot of data that I loaded here. And what I want to do is quickly use, before I finish things off, snap mode on, go from this low to that major high to this low over here. And what I want to do is quite often when you work with weekly time frames, it's better to use the modified pitchfork setting. And guys, something you might not know, modified shift pitchforks are the same or operate at the same angle as channels would, but only if you use the same anchor point. So if I had to run a channel from here, let's quickly do that so you can maybe just learn something quickly here. Same low, and hopefully we can find that low now with market geometry, and we use that same low and the same high. You see how those angles are the same. That's pretty much what I want to say. Look at where price found resistance at this angular line, support previously, although this is now after the fact. If you had this in here, that potential buy areas. These lines that I've had here on the weekly, strong divergence between important lows and lows. In that case there, lows and lows, we had it over there. And recently at this low median line as well. Now we're having momentum divergence as price reached between this previous high and that recent high on the weekly time frame. Momentum divergence in RSI. So are we preparing to see another deeper decline? It is a potential. Like I said, I'm not going to be talking too much about biases just yet. We're going to be tracking this now over the next few weeks, and I'll probably be building a stronger case here as to whether we're going to see a deeper decline or was this important high or not. Something else before I end things off here, as there's also symmetry between these moves to the upside from a range perspective. So we go from that low to that high to this low. Then this move to the upside. Am I using the same thing I supposed to? No, I'm not. Oh dear, why has that changed? I've obviously done my homework beforehand and now it's not showing the same thing. Bear with me 1 second, guys. Get my screws together. %. This range parity to this move to the downside. And I did have someone else, yeah. Just can't remember now which one did I use. Was it this one? Yeah, this parity and ranges that I'm currently seeing here, although there was something else I was using. But anyway, we have parity in this range, similar in this range. This range similar to this range. Price reached an upper median line of a modified pitchfork, again similar to that of a channel, actually same if you use the same anchor points. And just from a technical market jump perspective, potential reason why there's resistance in that area. Okay, potentially. But like I said, if you do want to see a little bit more of the dollar index, we'll definitely keep an eye on it. And please drop your comments or let us know the next time we have a session if you want to see the dollar index more. Alright, so guys, like I said, all eyes on Friday. I'll obviously be back for another session on Friday before we head into the weekend. And let's see how things go. I think basically wanted to say today on the indices side of things, on the ES and NQ, that they are at very strong resistance areas that needs to be overcome. Otherwise, it's not, we're not, we could still see a decline, and only then, if we do get declines that breaks these lows in June, then I think we're in bear territory for the first time, to be honest, in my opinion, from a market geometry perspective. Just by, watching major important levels, price structure and all those sort of things. Okay. Cool, guys. Thanks very much for watching. And as always, there will be timestamps accompanying this video. So you can, jump towards those markets that you like, that I've covered here today. And just quickly at a glance, see those levels that I mentioned. Right. Again, thanks very much. And take care, guys. And I'll see you again on Friday. Bye-bye.